Good morning, everyone. Well, craziness continues. Coronavirus rally, and now this gap up. So, as I look at this, question is it a pro gap or is it an exhaustion gap? One of the issues with this, I mean, just forgetting news, which we try to do as technical traders. I think in situations like this, it's a little difficult to do that because like last year with the China tariffs and so on, the news one day was bearish, the next day it was bullish, and we had this giant trading range for a while. Now we've got this higher low, higher high in a downtrend type of market, and you can see just the sideways action here. And I'm not sure whether it's a pro gap or an exhaustion gap, just based on the news that is one of those flies in the ointment that kind of just throws a wrench in things. But as I look at the technical pattern, the fact that it's been going up for this period of time is a negative. The fact that it's in a downtrend is a negative. The level of retracement to this resistance area is a negative. However, just looking at this bar by bar, red, green didn't follow through. It actually had gapped down the other day, right? But this is the futures, and so a deep retracement. And we talked about this yesterday, and then probably even the day before, with how deep and how far do prices close into a green bar like this. And this one obviously did quite a bit, and the markets tried to go down, and they were in that hourly trading range. And then the news came out. It is, Ludwig. So sideways price action, asking me, is it absorbing supply? It is. So as I'm saying, just looking at the chart versus this erratic type of price action because of being motivated by news makes it a little difficult, right, as to what it's really going to do here. But as I look at the chart, the fact that it went sideways here and we have red bars ignored at an area of resistance, that's a positive. It's gapping up out of a resting period. That's a positive. Right? So if this was in an uptrend, I would say it is definitely a pro gap. Right? The fact that it went sideways for this period of time, I can't really call it an exhaustion gap. So I'm kind of sitting on the fence and to see, well, what does actually today bring? Does it actually follow through? Because I don't remember what day it was, but we had a day, I believe it was last week, and we had a gap up. It was actually in a stock here in the green room. I think it was Amgen, as I remember. Dan would probably remember because he's good at that, remembering this kind of thing. And our discussion was in Amgen, when it gapped up, was it a concern that it would come back down and where to put the stop? And I said, look, this is gapping up from a bullish pattern. By no means should this fill the gap today. And it didn't, and it went higher. And I think it's still, just so everybody can be familiar with this that wasn't here, it was this pattern right here, what we call a 1, 2, 3, 4, wide range bar, inside bar. Number 3 takes out the low of the inside bar, rallies back up, and then it triggers. So it's not the same pattern, but the concept of a rest and then a gap is the same. Now, this is gapping into resistance. It's not gapping up into a void. So, it's not clear cut as to this here. That being said, okay, you look at the hourly chart and it was in that trading range and now it's gapped above it. And is this resting period that happened overnight enough? Can it take out this high and push up and let's say maybe 3,000 is the next stopping point where the 200 is and the next area of resistance? That we will gather, information from how this acts today. And just bar by bar analysis, really common sense. If at the end of the day, the high was never taken out, this pre-market high was never taken out, and it's closing down here below 2,800, Well, that's going to be a topping pattern, black and white. And just over here where we were talking, hey, look, we saw, this gap up and then this gap down. And the idea was, okay, that is bearish. There's no doubt about it. However, can it trade under these lows here? And it never did. So when we get patterns, downtrend, rally into resistance, so on and so forth, and we get a signal, some type of signal, this was the gap up, gap down. Well, our style of trading says, hey, okay, I got it. But now it's got a trigger by taking out at least a prior bar's low. It didn't happen. So no harm being done because of that, that individual concept. And it often saves us by that happening. Sometimes, yes, we do miss trades because that, overnight we see something and say, well, it's got to trade above a prior bar's high, and the next day it gaps up. So that's more of a personal choice and money management, how you want to handle that. You can enter it at night and with a smaller position and a bigger stop and see what happens. So as we look at markets, as we always do, we go and compare. What are they doing? And the NASDAQ has been outperforming. And you can see how this has really not been sideways. Right? That's why it's outperforming and showing relative strength. However, it is right up against a big number here at 9,000 and this high. And that is supportive of thinking, you know what, this thing might actually fall apart. And this gap up may be an exhaustion gap based on this chart. So we shall see. I mean, you can see it's starting to come in here. And, look, we don't always follow news, but it's some things that kind of say, is this information supported in the chart? And what I'm going to say is, yesterday Goldman Sachs starts talking, this thing's gone too far, too fast. It's likely to pull back. Today, they downgrade Apple Computer to a sell. So are they trying to walk this market down? Maybe they're already short. Yeah. And so, everybody's getting excited here, the gap up. Hey, we're going to start, opening up, just, typing in here, about EWG, Germany's opening up and the talk. So it, it's like it's coming, right? We're all going to get out of the house. They're going to take the cuffs off here. So that kind of leads, so yes, exhaustion gap, right? What's Paul asking me? I'm short 2,900 calls, PSX. What should I watch for? That it fails and doesn't go up, right? 2,900. So I don't know where that is right now. I look at the spiders and see where they're at. Well, they're dipping down. So far you're breathing, right? As the market's coming in. Yeah. So things are coming in here, but that doesn't really mean that they won't pop back up, at the open. We just have to see, right? So, you short those calls. You obviously didn't know this news was coming out. But Paul, I'll tell you, one of the things I said yesterday when I was short the ES and we had this head and shoulders pattern that wasn't playing out. And one of my comments was, the way this thing is trading, short is dangerous. And little before this news came out, the stop was hit. It was a scratch kind of trade, little loss. But the point was that we had this bearish pattern that just wasn't following through. You can't really see it here on the hourly, but we all saw it. It was like ready to break on the 5-minute chart, and it just wouldn't. And then it started to creep higher. As I said, this is a danger thing because the patterns were saying that people were getting short, expecting this market to pull back yesterday. And then, news comes out and it just rips higher. That's, why we have to use stops, because there's that unknown, especially in this crazy market. So as far as your short calls, let's just, hope that it keeps going down. And this is an exhaustion gap. And, you'll be able to exit that position with a profit. Right? Dow, all right, same story, gapping up toward the 50, gapped up above this resistance, sideways consolidation. So the underperformers have been going sideways and the outperformers have been going up, right? And we all know Amazon's been on a tear. Now we'll just have to see, Apple here is down a couple of points and falling, and that should put some pressure on the NASDAQ. We'll see what the other FANGs do. The Russell's gapping up here a long way, but it's not clearing resistance. It's been the weaker, but I said yesterday, right into the close, I says, this is shorts getting clipped here. It was just that kind of a pattern. And then, okay, we hear the news and then it continues after the close. So we'll see. Oil is down here, breaking through $20. That can't be a positive. Bonds are down. Well, it says it's down, but it's up above the open here. It looks odd. I guess down, whatever. The chart doesn't look right based on this, but it's down a little bit. Whatever. Gold down a bit, but in an uptrend, pulling back, should form a buy setup. Silver here, right? Maybe similar, consolidating here under the 50. So we'll see how that acts there. Good morning, Abe, there on YouTube. And Manny D, is it a day to cover shorts? Well, it's a day that, Manny, that you can't be feeling good to be short. I would suggest you hold your breath here for 5 minutes or 30 minutes and see if this market keeps coming in, and maybe you get a reprieve on your death sentence, so to speak. When we get kind of what we call disaster gaps, we have what we call a 5-minute rule, 30-minute rule, and we wait and see what happens. A lot of times it'll save. All right. UNG, I don't know, so many gaps, the futures trading, and this thing seems to go down forever. You can see here on the weekly chart. I think it's kind of a dangerous thing to trade. It's always gapping. I see the retest pattern here. So I don't know. It's up here a bit. I don't really pay much attention to it, but I guess it's got a neutral bullish pattern and within a downtrend in multiple time frames. And the transports, little buy setup there, and there are little dots up there show it's up a little bit, gapping like everything else. Everything's going to be a pretty much wait and see in the first at least 5 minutes to 30 minutes to just see if this thing is an exhaustion gap or whether it can, hold and come back up again. Obviously it's been the lagger, the Russell, and bearish island reversal, gap down, and now it's back up here, up at 124. So just insane patterns. It's insane. Because it's news. It's like this thing comes out of the blue with, we knew the market was going to pull back, back in January. Nothing. No one expected this. I didn't expect this because you can't, unless someone's telling you what's going on in insider stuff, that such a bad thing is coming. But it's just crazy news that collapsed this market in this way. It's like, was the end of the world really coming? No, we don't think that, but who knows how ugly it would have gotten. And now it doesn't. Now it seems like, not that it was a hoax, but come on, a gazillion, breathing machines that now nobody needs, hospital beds built for millions and millions of dollars with nobody in them. I don't know. And they're still debating what to do here. Let's close the world until after the presidential election. It's all BS to me. Anyway, 218-ish, 219, right up into resistance, the same story. So I think, to be long overnight, take some money off the table, right, and see. If you love your positions, it's probably going to be a good morning to sell covered calls. If you really like what you have, you know, you get some premium that's out of the money, and you know, hold on, you know, lower your cost by selling those calls. All right, Dan, that's it for me. And basically a wait and see. Oh, Roku gapping down 4, and most things up, of course. Boeing, right? Boeing says they're going to start production again somewhere.
Yeah, I got Boeing on my list. It's been tough. Let's look at opens here. So when you get big, our swing and options trader, we're more heavily on the long side, but we got 2 shorts going against us, and we're more bear call spread oriented in the weekly. So there's actually more problem children over there. But let's go through them here. As you hear me tell you that silly analogy, I'm more concerned of open inventory than I am looking for new opportunity. Because if your warehouse is on fire, then what are you doing going to the shopping mart to buy more inventory? So let's focus on this. All right, someone Softwat asking about Google on YouTube, but let me get through opens here based on the statement I just made. All right, AMD. We only have a third lot left, or no, actually we have a half lot left. And you know what? Somebody emailed me the other day saying, Dan, you know, sometimes I see you taking trades or selling things pre-market. I came so close to telling you all to sell this pre-market, but it was acting strong. And I said, I already moved the stop to 5-minute low. And now we're giving up some of those gains. You know, that's a deep retracement now, but it's going to lock in a beautiful gain because we got in this over this red bar. Beautiful, just no brainer, red bar breakout pattern. All right, so 5-minute low on that. We just go alphabetical here. Codex, we sold a third. That was a little Corona stock that someone in the green room found it yesterday morning, right in here. And it was just a beautiful gap, pulled in pre-market, wide range igniting in the morning. We bought a 15-minute high. Just a beautiful trade. Sold a third into strength. And I actually was shocked to see it gap down here. I guess I'm no fundamentalist, but I guess just because it's having an opposite effect with some of these other ones, the Myrna, the Gilead, you know, etc. All right, let me keep going. So I moved stop 5-minute low on Codex. GCOS, we're long stock. Hilton, we're short stock. And I said yesterday into the close, this is looking like a launching pad. So we're going to keep a tight stop on it and look to reverse and go long. I was also, you know, looking at the beat up hotel industry. Hyatt here gapping up, stay was on our list yesterday, little bull flag on the 15. I was going to give that long today over yesterday's high, but you know, I don't like big gaps unless it's in our favor and we're just selling or covering into strength or weakness. Yeah, you know what, George, I'm reading George's comment. It's hard to believe the economy's collapsed. Market's only down 15%. I agree with you. And also, and you know how I'm always making fun of headlines and people's logic and news and filling in the blank on stupid things. There were in the journal today, there was a big article. The title of the article, Stocks Rise and Stocks and Unemployment Claims Hit, you know, new highs. It's like, does that make any sense? Why is the market? And, you know, looking at the spiders here, I think the dead low, well, no, it wasn't the dead low. I take that back. It was this low. This recent low was when Trump was on TV blabbing that the next 2 weeks are going to be the absolute worst. Look at this. L. Alarian, the bond guy, used to partner with Gross. I like him. He's a very intelligent man, in my opinion. I respect what he says. Joe Kernan today was really grilling him, which I like, because L. Alarian, even down here on the gap down, he's like, no way, Jose. We're going to do a double bottom. Things are going to get worse. And then Joe's looking at him today, and whatever this rise is, let's just call it 20%. He's like, oh, okay, so you've been telling people to, stay away, and what about this 20% rally? And he's like, well, I've told you to stay with quality things, and whatever. So my point is, yes, there's always a disconnect between the markets and the current news, because they're forward looking. And I've made the comment many times that a lot of these stock plays not only are technical, of course, because that's the only thing we trade, but it's going to be a play on when they get back to having customers and trying to make money. Oh, L. Alarian also said, which I thought was very interesting, more of a macro comment. Yeah, I like the sell-off here in the market so far. Gapped up, and they're pretty much solid red bars. He made this comment, which, I'm not a fundamentalist, but I'll take note of something that makes sense, because then it helps to push the throttle a little bit. If I see the technical setup supporting that belief. He said, Joe, the S&P is trading at 20x last year's earnings. That's what he said. Think about that. Think about that, folks. Just common sense math. I don't know if it's true or not. I'm just repeating what he said. You can easily calculate it and see if it's true. But he says the S&P is trading at 20x last year's earnings. This year, there ain't going to be any earnings for most companies, or at least, quarter or two. So what do you think that 20x is going to be when you divide it by 0? I know he said that too, Ahmad, I said it too, that when the Fed came out with that 2.3 trillion and they said they're going to be buying high yield debt, which is code for junk, to me, that's like it's like, a Fed put. They're like, hey, we got a floor here. We aren't gonna let you fall. All right, sorry for all that side note commentary there. I think I got distracted on Hilton. All right, so we're unfortunately short that, and it's actually we had a big stop. You know what? We are actually right at our stop. So even with the adverse gap, it's not a catastrophic loss. It's our calculated loss, which on our spreadsheet is $350 a share per trade. So it doesn't go into the disaster category. IWM, we have this in both letters actually. We have a call spread over the highs, the 125, 130 for next week. Big gap up, but this one has not hit the stop. We did it wide, and we also did a half lot of a bear put debit spread, and I've moved the stop, 30-minute high or 30-minute low. We can actually add. Lilly, we have a covered call. That's gapping up, looks good. We have a third lot yet. Michael Jackson, long stock. NVO, nice gap breakout. We bought into the close yesterday. Finally, Tilray, covered call, another little marijuana. All right, so that's it in the swing letter. Weekly options trader, Facebook. We have a far out of the money, the 185s, 185, 190s for next week. No, I don't like today's action at all. So we're going to use our rule of 30-minute high on that one. I already posted it. Zulu Sierra, we have a put spread. We covered half at 60% of max gain yesterday in the video. We have a put spread that expires today. And it looks great. That should expire. It's way out of the money, the 275s. So it's $23 out of the money. That looks fine. IWM I mentioned, and McDonald's is a problem here. We're going to use a 30-minute high. We did the 185s, 185s. So that's 50 cents over that. And the setup was perfect. Every single one of these. When I do trade review, I want to see if we did anything wrong. And it was a beautiful look. Yesterday morning, the weakness, this was breaking down. You got a wall of resistance. You got a sell setup on the weekly. So you can't kick yourself. It was a great setup. So that's it. So that's our inventory. Now let's look at gappers. So someone asked about Google. On the gap up day here, I had it as a put spread over these highs. So I loved it on the breakout with a price void. Now it's inside bars. Now it's gapping up. Let's see, 1280. Yeah, it's gapping over these highs. Sell setup weekly, but you still got a bullish daily. I think it's going to totally depend what the broader markets do. There's still red bars pre-market. So no longs for me, but it's a watch. It's a watch if you can get maybe a double bottom for a day trade long and or put spread that expires today. Let's go through some of these gappers. This was a wide range breakout yesterday, and I was going to keep it on the list for 1, 2, 3, but now it's a deep retracement. Carg, I think they were in the news about, I don't know, shutting down some things, whatever. It's a bottoming pattern. Bottoming patterns are tough because they're not only a bottoming pattern, but they're showing tremendous relative weakness. And so then if the broader markets start to fall, then, what do you think these things are going to do? Oh, I missed Lulu. Lulu, we have a covered call. And I said, move stop, 5-minute low. And we're short the 215s. That's actually bullish pre-market. So that if it stops out, will be at a gain. Apple has a downgrade from Goldman, downgrade to sell. Wow, I wonder who they pissed off at Goldman. This is a mess. Martin 2160. I don't like the way it came down in a sloppy manner. Hey, Hiram. Yeah, Hiram. Hiram Neves. That's a new name. Welcome. If you can put your drop down to all panelists and attendees. But if you McDonald's, all the call spreads, any call spread that you're in going against you, just 30-minute high for starters. ISRG had earnings. It's a gap breakout. Put spread watch. I'll keep an eye on that. Cooter is, I think, a secondary offering at a lower price, I think I read. That's a bearish gap. I got no interest. Boeing, we mentioned, going to fire up their furnaces. All right, see, that's not a deep enough gap to interest me. So you're gone for now. Myrna, if I were in this, I'd be just chinging, my pocketbook. Walgreens had earnings, a bullish gap over yesterday's red bar, but you got a sell set up on the daily, and it's a mess. We can find better. CPE looks like it's going to 0. Look at that trend, daily, weekly, monthly. That's a death trend. Uber is trying to break out, reverse head and shoulders here, left shoulder, head, right shoulder. A little bit of a price away. That's worth keeping. Plants. Oh, this is good news. The Journal said that Trump said something or other about allowing gyms to reopen. So that was music to my ears. But it's a you know local thing. So we need our mayor to say it's okay to open up the gyms. Yeah, I would. I miss my gym, Clint. I've been exercising the best I can with the rubber bands at home and push-ups, sit-ups, walking, bike riding, but no pattern on plant. Fun had earnings. I sent this out as an alert to being a bullish gap bottoming pattern, but gap from this consolidation. Monster W pattern with a price void. So FUN, Gustav, I said the N part, so don't get excited. FUN. I like that one. It's in the upper right window. This STT, earnings, gap and resistance, slob, garbage. Yeah, TMOS, that was a nice, that was on my list. It's right here. I was going to give that as a day trade long over the high, but yeah, it's gapping up and pulling in. So I'd be taking the money too. Still selling off pre-market, so that the more time we get, it's supporting the bias of short-term top. Tandem was on my list today, but gap up, messing it up. McGraw, quick draw McGraw. If you can, if there's any put spread